Jim, what are some of the most common misunderstandings about how the reverse mortgage works today?
Well, Richard, I'm glad you asked the question because there are a lot of them. Probably first and foremost, most people think they have to own their home free and clear in order to do a reverse, when in fact, the majority of reverse mortgages are used to pay off existing mortgages and relieve the homeowner of the monthly obligation of that principal and interest payment, improving their cash flow. So you don't have to own your home free and clear. People think they're giving up title to their home or they're selling their home when they do a reverse. Neither is true. It is simply a loan secured by a lien against the home. No change in title. People think the loan is permanent, that once in, they can't get out. That is not true either. The loan can be refinanced. It can be refinanced into another reverse or into a conventional loan or paid off entirely. There's no prepayment penalty associated with it. Some people fear that they may outlive the loan and at some point have to start making payments or worse, move out of the house. Neither of those is true either. You cannot outlive a reverse mortgage unless you plan on living to 151, and nobody has made it there as yet. Many people think that the lender gets the house at the end automatically. Not the case. Lenders don't want the real estate. They just want the loan to be repaid. So they'll do everything in their power to keep the home in the estate or the family's possession. People think their kids can't inherit the house if they've got a reverse on it. Not the case. They can leave it to their heirs in their will. The home will have a lien attached to it that the kids must address. The lien has to be paid off, it could be refinanced, whatever it is, but the kids can inherit the house. And finally, people think that they may wind up owing more than the house is worth and have to reach into their savings to make up the difference. It is a non-recourse loan. They cannot owe more than the value of the real estate at loan termination. There could be no deficiency judgment against the borrowers or their estate. So that fear is not well founded either.